Everyone, what's up? This is Rudy for Investor Investor. I'm searching for some undervalued stocks, and it's tough in this market because there are many stocks that are overvalued. So I thought I'll take a walk down the financial sector path and see if I can find something that's interesting. And the first one I kind of stumbled upon because it's down so much was Wells Fargo, and I thought to title the this presentation, "It's Official: Wells Fargo Sucks." Let's take a quick look and see what's going on at Wells Fargo. First, as you know, I like to look at the balance sheet. I like to look at the fundamentals of any stock. In the case of Wells Fargo, I'm looking at the balance sheet and I see that Wells Fargo has assets valued at approximately close to $2 billion, liabilities close to $1.8 billion, and owner's equity of only $179 million compared with its market cap of $99 billion. So according to the balance sheet, the shareholders' value or shareholder equity in the company is $179 million, and according to the market, Wells Fargo is valued at $99 billion. Of course, this is not a hard and fast rule, but this is typically my starting point, and there seems to be a huge delta between the owner's equity as per the balance sheet and the owner's equity as per the market cap trading in the public markets today. So let's take a look at Wells Fargo's financial snapshot over here. You can see that the date of the data that I'm sharing with you is as of today, which is August the 18th. We can see Wells Fargo is trading in a reasonably narrow range of around $24 approximately. It's easy to see that it's trading at its all-time low. It's been very volatile, almost 60%. It's got a market cap of $99 billion, which is what I just mentioned on the previous slide that I showed you. It's got a PE ratio of 28. I'm going to come back to that one in just a minute. Wells Fargo recently cut their dividend to just 40 cents per share, which it calculates at today's stock price at about 1.63%. Its next dividend payout is on September 1, which is about a week away from today. And it's about almost 70% held by institutions, and not too many people are holding Wells Fargo short. And if they're not shorting Wells Fargo, they are probably confidently predicting that it may be at or near its bottom. Let's look at the Wells Fargo price earnings and the sales to book ratios. So firstly, just by way of an example, I said I'll come back to the PE ratio. For the people who don't know, this is kind of the definition of the PE ratio. It's a relative valuation measure used to determine if a stock is expensive in relation to its peers. It's calculated by dividing the current stock price by the sum of the diluted earnings per share from continuing operations before extraordinary items and accounting changes over the last 4 interim periods. So what we have here is Wells Fargo, the little gray block, and the industry average is the little vertical black line. Wells Fargo has a PE ratio of almost 28. The industry is at 13, so Wells Fargo arguably is valued at 2 times more than the industry on average. So you can buy other financial stocks at half of the PE value of Wells Fargo as it is today. Furthermore, you can see that according to its price to sales, TTM means trailing 12 months, Wells Fargo is lagging the industry again by about half or thereabouts. And then if we look at the price to book ratio, MRQ is the most recent quarter. Wells Fargo is once again lagging the industry and lagging quite badly. So it's overvalued as opposed to being undervalued. I don't like a PE at 28. I prefer to see the PE sort of below the S&P 500 average, which is sort of around 15, if I'm going to buy into a stock. So Wells Fargo, despite the low stock price right now, actually at a glance appears to be overvalued. If we look at Wells Fargo and compare it to its peers, so here we have sort of 4 kind of similar sized or similar banks: Wells Fargo, Bank of America, Citibank, and US Bank Corp. Look at the 52-week change in Wells Fargo. It's fair to say what is going on here with Wells Fargo. All the bank stocks are down, as you can even see here on US Bancorp, 30%. But at the end of the day, Wells Fargo is down more than most. It's hard for me to believe. I had a position once in Wells Fargo, which probably dates back to about 2012 or so. I bought Wells Fargo at about $24 at the time, maybe between 24 and 28. I kept adding to the position. Um, I eventually sold it with a trading stop at about $50 or so, so almost doubled my money. And it's amazing that today Wells Fargo is back down to a market cap of 100 billion. At the time when I was invested in Wells Fargo, it had a market cap of almost 300 billion or thereabouts. So how the mighty have fallen. Look at the dividend yield on Wells Fargo, 1.63. The other banks, much more healthy dividend. Much nicer to be invested in those. We looked at the PE just a minute ago, so I'm not going to go into that again. So let's look at the valuation for Wells Fargo. So growth rate, the trailing 12 months earnings at Wells Fargo declined at a greater rate than revenues. Additionally, the average company in the bank's industry also saw falling earnings, albeit at a slower rate than Wells Fargo. So earnings at Wells Fargo has been declining at a greater rate than its revenues and at a faster rate compared to the rest of the financial services industry. How about profitability? Wells Fargo has a cost structure that eats up a percentage of its revenues that is amongst the highest in any company in the bank's industry. Yet the company is still profitable with an operating margin of 5.3%. And what a horrible statistic that is. It's like you never want to be the leader in terms of the highest operating cost in your particular industry. Wells Fargo's dividend is not sustainable. Over the past 12 months, it paid out more in dividends than what it earned in revenue, so that cannot continue. What exactly is going on with Wells Fargo? So first, let's look at the bad news. I think by now most of you will be aware of the fact that in 2016 Wells Fargo had opened accounts without permission from customers. The House Financial Services Committee says Wells Fargo's board and senior management failed to comply with consent orders issued by regulators in response to the bank's widespread consumer abuses. And that's kind of what it relates to, dating back all the way to 2016. In a scathing report, lawmakers accused federal regulators of failing to hold the bank accountable for its misdeeds, which included opening phony accounts, charging unnecessary auto insurance, and overcharging military service members to refinance mortgages. The 113-page report also claims that former Wells Fargo chair and CEO Tim Stumpf, can't see his name there behind my picture, provided inaccurate and misleading information to Congress during March of 2019. Well, not everything about Wells Fargo is bad news. So if we look at Q2, which was the most recently announced quarter, which ended on June the 30th, if we look at the hedge fund action, it's always nice to see what the big institutional buyers are doing, or sellers. Wells Fargo was the second most bought stock for the quarter after Facebook. It was also popular with value investors, and some big names added to their holdings. Maverick Capital increased their position by 750%. There's no question that Wells Fargo is cheap, and it might be cheap for all the right reasons, which unfortunately means it's cheap for the wrong reasons. But the bank is not doing well. But if you're going to buy, Wells Fargo for $24, $25, you probably think this is a steal, regardless of the PE that is so high, and the fact that it's arguably still overvalued today, and it has an unsustainable dividend that it's still paying out. But the big boys are jumping in and buying some. That's Maverick Capital. David Tepperell's Appaloosa management added to its holding as well, taking its position up to 1.9 million shares. But the biggest buyer by far was Dodge & Cox. That fund manager boosted its position by 14% to 63 million shares in the struggling banking giant. So Not all bad news. People are buying, so there are some positive signs as well for Wells Fargo. Let me know in the comments what you think. As I said at the start, I was looking for an undervalued stock, but I'm convinced at this stage that Wells Fargo just sucks. So I'm probably not in a position to say this is an undervalued stock I want to invest in. But if you think differently, let me know in the comments. If you like the video, subscribe or give me a thumbs up. And this is Rudy for Best Investor signing off, and I'll see you guys soon. Thanks for watching. Bye bye.